Welcome to Markets Now. I'm Michelle Rook with Chip Nellinger, Blue Reef Agri-Marketing. On Friday, we ended with livestock futures lower. The grains had a nice rally, and Chip, boy, most of it looked to be technical or kind of what we call get me out kind of trading of the funds in their short positions, at least on the grain side, anyways.
Yeah, it really did. I think maybe what's driving this is just some outside market volatility. I mean, tremendous volatility in some of our markets, some of the soft markets like cocoa. Obviously, that's been a more of a fundamental issue, but the coffee market, the metals markets, you saw gold into new all-time highs, this past week, and a big reversal Friday after being up sharply. So you've got some tremendous volatility out there. The stock market's looking a little bit toppy. The dollar index is sharply higher. And I think with all this uncertainty out there, on top of that, you've got the Russia-Ukraine war, the threat of Iran bombing Israel, and I think with all that uncertainty, it's created tremendous volatility in the outside markets. And these funds in the ag sector just seem to have said last week, just get me out. I'm tired of being short in the grains. I'm tired of being long in the livestock.
Yeah.
Get me out. Get to the sidelines, and we'll sift out this uncertainty that's ahead of us.
Yeah, so let's talk about the grain since the funds were so short in that market. Is this the start of a trend? Is this the spark that's going to get them to get out of those positions, and how much of a rally could we get on it?
Depends on what happens in the outside markets, Michelle. I think there's so much volatility out there in different sectors. Stock market looks to me like it's starting to roll over a little bit. You've had a huge rally in the dollar, huge rally in the metals markets, especially gold with new all-time highs. So if it is a case that this is the start of it, I don't think we can get too bulled up about it. I think it could produce, maybe another 20 to 30 cents higher in corn if the funds decide to exit the remaining shorts. Maybe 60, 80 cents in beans from an old crop position. I'm talking here. The new crop will be less than that, but I don't think it's something that we need to get overly bulled up about right now. Now, if down the road during the weather market and the growing season, something happens, that's a different story. But I think that if you do see the funds continue to exit their shorts in the grains, it should be seen as an opportunity rather than, reversing and thinking we're going to have a huge bull move right now in the grains.
We do have a lot of grain that's still sitting in farmers' hands. A lot of it is still in storage. A lot of it needs to be priced here before we get to end of the month and have to do these basis fixed contract pricing. So is the rally going to be muted because of that?
Yeah, and I think that's a good point, and that's part of the reason in my thought process where if the funds do get out of their corn shorts in mass, it's probably no more than a 30-cent rally because of all that unpriced inventory that's sitting in U.S. farmers' hands on corn. Same situation on beans, only it's the Brazilian farmer that holds a lot of unpriced inventory. So rallies will be muted and met with the selling from the farmer. So it will be a big transfer of ownership as the funds exit shorts. The farmers will sell their inventory, and that will mute the rally. And that's why I don't think you can get too bulled up just yet until we get deeper in the growing season and then talk about whether there's a production threat that's ahead of us.
Yeah, and you and I have talked about that really a production threat was one of the only things that could really get the funds to get out of these shorts in the first place. So that's why today is even more of a head scratcher, right?
It is, and I think we also talked about that it could be something, in the financial markets that is unrelated to anything fundamentally, and that may be, in fact, what we're seeing, and that's not necessarily a good development, right? Because if there is something going on, and it kind of feels like that with the volatility we saw this week in some of the metals markets and the stock market and the dollar, it almost feels like, maybe there's a bank, maybe there's a fund, maybe there's something else going on underneath the surface. And if that's the case, that's usually not a good sign, within the economy or the financial system. So if that's the case, it's not necessarily a good situation that the funds are getting out of their shorts right now. And it's even more of an opportunity likely. So I think the critical thing is don't get bulled up, even if you see a continuing rally here in the short run. Use it as an opportunity.
Okay. And now we are going to be, now that the reports are out of the way, we're going to be really more focused in on weather for the next couple of weeks and planting progress, right?
Absolutely. That's going to be part of it as well. And anymore, I know we had faced that several years ago where it just started raining and never stopped. And that was one of the only times in history we saw, the market digest the fact that crops didn't get planted that year. It is so hard to have a planting delay rally. A lot of farmers now have two planters. They're high speed. We can get a lot of crop planted in a short amount of time. And so weather is definitely going to be, a factor going forward. And it just is so hard to create a bull case during planting season. And in fact, I know that in the Western Corn Belt, it's pretty dry. And farmers want some more rain, need some more rain. But in the short run, if it stays dry and planters start rolling early and fast, that's probably a little bit of a bearish influence on the market, at least for now. If that lasts into June, July, that's a different story. But right now in April and May, dry weather means fast planting, and that's probably a bearish influence.
Chip, when we get to the end of the month and we have to start pricing those basis fixed contracts or rolling those, do you think we're going to have the same sort of problem that we had when we got to the end of February with the big
We
sell-off?
could. Yeah, we could. A lot of basis contracts out there still. It seems like starting with the December with that roll to March and then the March to the May, there's more and more that's been priced and liquidated. So I don't think it's as big a problem, but certainly there's a lot of May basis contracts out there that have a decision point coming, within the next 10 days or 2 weeks on whether we need to roll that out to July or just go ahead and price it. A rally this coming week or 10 days going into the end of the month probably is something like we talked about earlier that kind of caps a rally because producers will likely reward the rally instead of just rolling it out.
Yeah. So cattle market had already kind of rolled over here before the stock market imploded, but obviously we've had continued HPAI cases. It's continued to spread. I guess the question I have now, will the funds continue to exit positions here? And are we looking at taking out those December lows now?
Well, potentially. I mean, that's the fear, right? I mean, I think it's kind of the perfect storm. It started a couple weeks back, at the end of March with a bearish cattle on feed report, and then we had the avian flu situation. Now we've got the stock market rolling over and some questions about the economy and demand, and so it's just a perfect storm out there. The funds seem to be in full-fledged liquidation mode.
Yeah.
To me, I think that you probably have better support in the low to mid 160s. Once you see that, then I think you see some more stability. And at that point, I think the funds are probably liquidated out a lot of what they've added on the long side over the last 3 months. So you kind of start the book and the story over again from that point. I think the break in the futures obviously has drug the cash market a little bit lower, but things are still fairly tight out there. I don't think it's something that we need to, take $30 more out of cattle, but we sure could take another 6 or 8 out of it before the funds get liquidated all that they need.
Yeah. Two lower mainly is what we saw here on a lifestyle basis in the South. So really that market is held together, the cash side pretty well overall. Do you think the hog market is rolled over here now? Did today's action basically confirm that bearish key reversal we got earlier in the week?
Well, maybe that's maybe the thing that's the signal, right? You saw some weakness in the cattle market the last couple of weeks. Actually, produced some strength in hogs, and there's probably some reasons for that. Demand's been really good on the pork side. Exports have been really strong, and so that's maybe the canary in the coal mine to me is the fact that you had such a huge reversal in the hogs, meaning it's probably more than just the avian flu situation in cattle. It's maybe just a full-fledged fund liquidation. I think the hogs are part of that. You could probably break that further. I don't think that it means that we can't go higher into summer, but I do think that it's just another signal, and maybe the biggest signal that in our grain and livestock markets, the funds are, maybe in the process of just a mass liquidation because of all the uncertainty in the rest of the world.
Yeah, they were pretty long in cattle and hogs, so them getting out here will hurt for sure. All right, thanks, Chip. Chip
Thanks.
Nellinger, Blue Reef Agri-Marketing. That is Markets Now.